Today we're taking a deeper look at Bitcoin, and this time the goal is to understand why price actually moves. Not the simple version you see everywhere online, but the real mechanics behind it. And we're redoing it with the help of AI so we can strip out noise and focus on the parts of the market that matter. The first thing the AI highlighted is that Bitcoin doesn't move because a candle looks bullish or bearish. It moves because the market is constantly searching for liquidity. Liquidity is just a technical word for where the money sits, and when you understand where that money is, everything becomes easier to read. Under the current price, we have a clear cluster around 70,000. That area is packed with stop losses from long positions. When people enter late or enter emotionally, they usually place their stops in the same obvious zones. Institutions know that. So when price approaches 70,000, it's not random. It's reacting to a pool of orders waiting to be taken. Above the market, we have the opposite situation. The zone between 76 and 77,000 holds liquidity for short positions. Traders betting on a correction have their stops right above that level. And for the market, that becomes fuel. If price wants to move higher, it usually grabs that liquidity first. The AI also pointed out something important: inefficiencies. When the market moves too quickly in one direction, it often leaves behind gaps where no real trading happened. And over time, price tends to revisit those zones to rebalance. We've got a couple of these inefficiencies above and below the current range, which is why the market feels undecided but controlled. It's not weakness. It's recalibration. Another key point we looked at is how institutional players behave. Retail traders react to candles. Institutions react to liquidity. If a level has no liquidity, they don't care about it. If a level is full of stops, pending orders, or unfinished business, that's where they step in. And this is exactly why the 70 and 77 zones are so important. Both sides of the chart are heavy with liquidity, so price will eventually be drawn to one of them. The AI broke everything into realistic scenarios. One scenario is a move back into the 70,000 area to collect liquidity and then continue upward. Another scenario is a push into 77,000 to clean out short positions before any deeper pullback. And of course, there's the possibility that Bitcoin stays inside this range until one side loses patience. The message here is simple. Price moves with intention. Not because of news, not because of random spikes, but because the market always hunts liquidity and corrects inefficiencies. And when you watch the chart through that lens, it suddenly becomes much more logical. I use AI to help me see these structures more clearly, but the decisions are still mine. This experiment is about combining human intuition with AI's ability to read patterns without emotion. If you're enjoying this breakdown and want to follow the journey, feel free to subscribe. No hype, no promises, just real analysis and a transparent trading journal.